Good evening and welcome to the program. This is Money Matters, the first episode of this program in 2024. This is Chris MWOLOLO, and on sign language interpretation is Tobias Omondi. So being on a new year, I just selected this topic to kickstart the program of Money Matters, and the topic that I'm going to discuss today is setting financial goals. And before we dive deeply into the topic, let's first understand what is a financial goal. So a financial goal is an objective whose completion is based upon money. And some examples of financial goals include establishing an emergency fund, saving for a vacation, purchasing a car, getting out of debt, and many others. Now, did you know that there are three types of financial goals? The first one is short-term financial goals, and short-term goals can be reached in a year or less. For example, saving for a digital camera. Now, looking at the cost of a digital camera is something that you can purchase within a year if you get serious with your savings. Because let's say a camera could be around 60,000. So let's say if you save 5,000 every month, you can reach the target and get the money to buy a digital camera. That's only an example, but of course we have many other examples of short-term goals. Another one is mid-term financial goals, and these ones can be reached in 1 to 5 years. For example, buying a car. Again, if you are serious with your savings, you can contribute some money in those 5 years, depending on the type of car you want to buy, and if you save, you can get that money. Then the last type is the long-term goals, and these ones can be reached in 5 years or more. For example, buying land. Right, after looking at those three types of financial goals, I want us to answer this question. How do you set financial goals for this year? Beg your pardon. Now, I'm going to outline and discuss with you 5 steps that you should consider working through to set your financial goals. But as usual, we start with the important points to note, or what we call key takeaways. So first, your financial goals are both a to-do list and a long-term strategy. So when listing your financial goals, keep in mind that you can list them depending with the type of the financial goal. As we have discussed, we have the 3 types of financial goals. So when you are making your list, you have to consider the goal and which category or type that your goal lies. Then another point you need to note is listing, prioritizing, and finding the intention behind your goals makes you more accountable and increases your likelihood of success and achieving them. Then another thing is a financial plan provides a vision for working towards your goal. Revisit your goals and your plan regularly to review your priorities and check your progress. So you need to have a financial plan, and this one will guide you, will guide you to make your plan, and of because you need to review those priorities and check the progress. Of course, I'll explain that as we proceed. Then, whether it's leaving a legacy for the next generation or buying a home, setting financial goals is essential for achieving what matters most to you. Understanding how to set goals is the first step to creating a financial plan that works for you. Your financial goals are an ongoing process that provide clarity and confidence for the future. You are building a vision for the things you are dreaming about and you want to accomplish. I'm sure by the end of the program this evening, you would have thought of starting this process and see the possibilities unfold. Before we go to the steps of setting the goals, note that when setting financial goals, it's important to reflect on intentions and aspirations which can help you establish and achieve them with confidence. Now, let's take a look at these steps, and the first one is list and prioritize your financial goals. Start by listing out your financial goals, that is both those you are already working towards and those you haven't started on yet. As you identify each goal, prioritize the list from the most to the least important. You write down specific details about each goal, such as the timeline, the amount of money you will need, and how much you have already saved. This will help you to understand what it will take to achieve each goal and build a plan. Look at where your goals fall on your list of priorities and your timeline to determine which to address first. For example, you could have a short-term goal of taking a vacation or even buying a new home, or a longer-term goal such as retirement or paying for your child's college education. So priorities are personal and they differ from person to person. Additionally, keep in mind that it is possible to save for more than one goal at a time, especially mixing short-term and long-term goals. You can put money away for a vacation while continuing to contribute to the retirement accounts. Also, knowing what's most important to you will help you determine how to set money aside and how to adjust when setbacks happen. Okay? The second step is take care of the financial basics. Now, once you identify your goals, ensure your basics are covered. Depending on your stage of financial planning, this may either be on your list of financial goals or you may have already accomplished them. It's a good idea to revisit them, though to make sure you are still on track, do the following. First, build an emergency fund. It's important to have funds set aside for unexpected scenarios such as medical expenses or a job loss. This would be very wonderful to explain because I'm sure there are people who have experience, especially when COVID came in 2020 and a person did not have an emergency fund, and a percentage of people lost their jobs. So for those who didn't have anything put aside, they really suffered. So this is why it's important to have some money set aside to cater for unexpected scenarios. It's not a must to be a job loss. We've mentioned about medical expenses. If you don't have anything put aside to cater for medical expenses, then it will force you to maybe look for loans or have to lend money from banks or anywhere, and of course it might inconvenience you. A good starting point is to have a 3 to 6 months of your living expenses put into an easily accessible account. So this money, you have to put it somewhere, and in some of our previous episodes we've told you where you can put your money to accessible accounts. It may be a bank, it may be a money market fund, it could be M-Shwari, KCB M-Pesa. Yeah, remember the options that we listed last year. Then another thing you need to do is pay off debt. If you have outstanding high interest debts, pay that off first before saving for other goals. This is self-explanatory. If you have some loans that are pending, make sure you work hard to pay off those debts, and then you focus on saving for other goals. Another thing is saving for retirement. You need to put money aside for retirement on a consistent basis. The earlier you begin, the more you benefit from the magic of compound interest. This is something we've also talked about in this program, and I remember I listed and discussed some of the benefits of saving for retirement. Then having these financial basics in place will give you a strong foundation to build on when pursuing your other goals. From there, this brings us to the third step, and that is connecting each financial goal to a deeper motivation. Just like with fitness or career goals, tying your financial goals to specific motivations makes them more meaningful. As you review your goals, reflect on the purpose behind each one. Ask yourself these questions. What is the underlying motivation for it? Who is the goal going to benefit? And of course, if you ask yourself those questions, of course, you will do something about it. Then another thing is making a financial plan to reach your financial goals. Now that you have your goals and motivations, the next thing you need to do is to understand how they all work together in a financial plan. You can either do this yourself or get help from a financial professional to understand how you position to achieve your goals. One place to start is knowing what you have and consider what you need. Document your income sources and expenses, and knowing how much money you can allocate on each goal every month gives you a clear direction to move forward. Of course, just to explain this a little bit, you need to know what you have and consider what you need. When we say that you need to document your income sources and expenses, this simply means calculating the money that you get versus the money that you use. So let's say your income sources are a salary from a full-time job, and maybe you have a side hustle. Then of course you need to deduct the expenses, the money that you use. Of course, in basic needs, you make your budget, and if there's some money that you will use in your side hustle, you calculate those ones, and then after calculating this, there's that amount that will be remaining, and that's where you will know how much money you can allocate on every goal that you have. Okay, and this will give you a direction to move forward on saving on your goals. Then use your goals and timelines as drivers for your financial plan. For example, if one of your goals is buying or building a house, knowing how much it will cost and when you want to build or buy it will help you make informed decisions for your financial plan. Then lastly, revisit your financial goals regularly. Once you learn how to identify financial goals and have your plan in place, keep in mind that your framework will evolve over time. Life changes and other factors can affect your financial goals. So it's important to review your goals at least once in a year to adjust expectations, check your progress, and review your priorities. Anytime something changes in your life for financial situation, it should be an indicator to review your goals. When you take time to reflect on the purpose behind your financial goals and put them in a realistic framework, you are more likely to stay accountable to and confident in your financial plan. Of course, that's it for today on Money Matters. We hope you've learned something. If you are wondering how you will start on setting your financial goals this year, you have some tips. And of course, expect some more informative content on this program concerning money and business. But for now, it's a wrap. This is Chris Mololo. Tobias Omondi has been my sign language interpreter. And until next time, have a good night and enjoy the rest of your viewing. Goodbye.